Okay, I think we live here now. A big welcome to everyone. Sorry for the couple of minutes delay. We've been having a bit of technical issues here. Just waiting for Andrew to come online properly here with a live picture, not a static one. But in the meantime, maybe you'd like to tell us where you're from. And just to thank you for your time this evening. We're going to make it worthwhile, I'm sure. It's the first time Andrew and I have done something like this together. So we're kind of both new to this technology. So you'll have to just excuse us if things go a bit wrong and we don't get our whole format right. But we wanted to make this more of a regular event. So we'd be keen on your feedback. Tell us where you're from. And I think if you can put a poll up there for as well as in a couple of minutes, just tell us what your Forex involvement is. We'd love to know how you're exposed to the Rand. So, Andrew, are you there yet? Okay, Andrew's still we're still waiting for Andrew to come through. You say there's an echo on the webinar feed. Reno?
Can you hear me now?
Yes.
Okay, hi. Look, hi, James. Hi, everyone. I can see quite a few people have entered into the room. As James said, apologies. I'm sitting working in my London office at the moment. I don't know where the glitch is with the camera, but I think importantly, as long as you can all hear me.
Yeah. Probably better we don't see you, Andrew.
Yeah. Had a tough day here and it's raining outside.
Okay. Yeah, so perhaps we'll kick this off, Andrew, is maybe just get some feedback from everyone as to what their involvement is, and Alex can put up a poll there, and then maybe just start off with you tell us a bit about about Sable and what they do.
Okay.
And then I'll do the same from my side, and then we can start with the uncertainty that there is on every front, and you can perhaps then talk us through that, what you're finding, what is on the ground, and then maybe I can from there discuss where we are on the Rand and where we see us going.
Yeah,
and then
fantastic.
if they want to do anything from there, then back to you again.
Okay, brilliant. Look, yeah, thanks very much. Thanks for the opportunity, James. And yeah, hopefully going forward we can make this a little bit slicker. But yes. Yeah, just from my point of view, for those of you who don't know me or my company, my name's Andrew Rissik. I'm the managing director of Sable International's Forex and International Project Division. We're essentially a London-based business with a very big representation in South Africa. So globally, we employ just in excess of 160 people. And what I'd like to chat to you about tonight, I think in the context of the Rand and everything that's going on in South Africa, is many people that I chat to really want to try and understand, what are the steps that they take to try and take action and either just move money offshore or to even move it offshore with a mind to investing. So I'll run through some of that sort of detail, and then I think, James, you can just chat about the more technical stuff. So in essence, we've been around for 22 years. We're a financial services and immigration business. We've got over 70,000 registered clients who use our foreign exchange services, predominantly South Africans with international interests and links, and all foreigners who investing or have interest in South Africa. So we're very well versed with helping people with dealing with their investment and hedging decisions in terms of trying to diversify from a country that is currently under threat, both politically and financially and economically. Our business, we currently do on average 150,000 foreign exchange transactions per year, and our turnover in sterling is 230 million pounds. So, we're fairly well versed in what we do. Maybe what I should do is, before we start sort of getting into the nitty gritty, is I'll just talk about the current exchange control environment for those of you who don't know what the current capital allowances are.
Yeah, I think Andrew.
We sort of different.
Andrew.
Yes, James.
Just in terms of format, just think it might be better if we maybe just leave that towards the end.
That's fine.
Yeah. Are you getting some echo here?
No, I'm clear.
Okay. All right. I'm just worrying that I'm getting some echo coming back. Perhaps let's just dive in with, let me just tell you a bit about us, and then we can talk about, why we're speaking about this today. Tonight. And then we can dive into that side of things. If persons want to move stuff, funds over, and that sort of thing, we can speak about that after that. Does that make sense?
Yep, happy with that.
Yeah. So let me just swap over. I think that was just said the start of your slideshow here. I'm going to put mine on. Yeah. So for what we do is, we educate clients about the market, primarily the Rand market, and we empower clients to optimize the exchange transactions. So that's primarily by providing forecasts in the dollar, euro, and pound versus the Rand, providing some exchange timing tools, and pricing and FX facility improvements. Am I sharing my screen? Can you see my screen?
Yeah, James, I think you've got part of my presentation up there, what I can see on the screen.
Oh, you got yours. Let's. Okay, I see what I'm doing here. Stop sharing. I think I was sharing the wrong screen. Yeah.
Okay, we're back
Sorry
to video.
about that.
Is that echo gone?
Are we still getting an echo?
No,
okay. Okay, can you see my screen now?
No, it's still video.
There we go.
Yep, got it.
Right. Okay. Yeah, so I mean, that's in essence, we did mention that we educate clients about the market, where the market's going, how the market works, and in view of helping them optimize the exchange transactions. So, whether it's against the dollar, euro, or pound, we provide forecasts on those, exchange timing tools, and pricing FX facility improvements. That's where you come in, Sable. With Sable, Andrew, we've had a long relationship with Andrew, and we use them for all our own transfers. And then we do other ad hoc forecasts on other markets. Just a short background for those who don't know me and my background. I've been in offshore investment management since '93, and in the foreign exchange trading and technical analysis since '94. So been forecasting financial markets since 2005, and that's a wide variety from all over the world. So that's just a bit of an intro. as to what who we are. But what I want to be giving you from our side to today is a view, on the markets, what make the markets work, and why, and how you can use this to your advantage. So perhaps what you can just go to from here, Andrew, is, I don't know if you can see my screen now.
Yeah, it's your what we do screen. I'm seeing.
Yeah, I'm seeing that. Why is this? It's not. Some reason it's not doing the slideshow. Okay, from beginning. I wonder what. On my screen it's showing the actual slideshow, but this is not showing it on the screen. Yeah. Just bear with us.
Okay.
Okay, so Alex is just telling me to share my desktop. So let's just do that here. Stop sharing. Thanks, guys, for your patience here. We've
Okay, we're back to video.
Okay, we're back to video. My desktop. Turning on to. Here we go. That should be better now.
Yeah, there we go. That's the slideshow.
Okay. All right, fine. Now, what we're talking about here was, we live in a world of increasing uncertainty, and that's political, social, economic, and financial. And I just thought perhaps we could talk a bit around that, Andrew. You're right on the ground there with what's happening in handling persons' funds and that sort of thing. And I don't know if you would want to take over your presentation itself, but I think clients would actually like to know, you connected in various circles there. How do you see things work where they are at the moment, politically, socially, economically, and financially?
James, yeah, that's a very good question. I think we're sitting in a space that's very concerning. But to contextualize it, we are running up to the leadership elections for the ANC in December. So I think there's a lot of political noise at the moment. But one of the things I think that you always talk about is we've got to, in these kind of conversations, differentiate between the market fundamentals and then the sentiment. And I think that we're going to see a lot of choppiness in the rand over the next couple of months, just driven by sentiment around a lot of the sort of political noise and the uncertainty that is sort of very prevalent in the media at the moment. But on the other side of the border, equally the rest of the world isn't exactly looking that stable at the moment, because there's also in destinations. I mean, you've got the Catalan, Barcelona, and the Catalonia area of Spain that basically voted to become independent. I mean, that's potentially a really rocky sort of occurrence that's happened in the EU. I see that they've kind of now pulled back on that. You've got Brexit. Britain's in a very tough position at the moment with their negotiations. And then, of course, you've got Donald Trump, who's a very different type of character to any of the previous US presidents. And he's got a way of really sort of making some quite hectic statements. And so you've got a noisy global environment. I think what we've got to try and drill down into the South African scenario is let's look at and understand the fundamentals. And I think I'm going to leave you more to talk about that technically.
Yes.
What I would say is that one of the fundamental drivers of the Rand from a sort of a more layman's term point of view are things like what's happening in the commodity world, because the Rand is a commodity currency. We're an emerging market. And
Yes.
in the last while, the emerging markets have been doing fairly well around the world. And so the Rand, up until recently, was actually looking quite strong, considering that we'd recently had downgrades from most of the ratings agencies. So, drill back into those fundamentals of an emerging market. South Africa is classified as an emerging market. And what defines an emerging market is things like economic growth, a higher rate than what you'd expect in a developed economy, industrialization. Yes. And I think that's kind of one of my areas of concern, is that as an emerging market, I think that those sort of definitions are, for me, problematic, because South Africa is showing very low growth for an emerging market. I think that, the sort of so-called state capture and the destruction of our state-owned enterprises and institutions is really damaging the economy. So we're a very low growth environment, which you would not expect from an emerging market. And then industrialization, I mean, that's another concern, because our industry and our strong sort of industrial sector is under threat at the moment. So I think that, look at that practically and say, is this really where you want to be invested if you already are? And how would you hedge your investments going forward, in that environment? Because if you look at a country like the UK, where I'm sitting at the moment, there's a lot of uncertainty. But the one thing that we do know is that they've got a strong political will to sort themselves out. It is as far as democracies go, one of the most established. There's rule of law. The government is run by people who are well educated. So these are the sort of things that we should really be looking at.
Yeah, if I want to ask, I mean, what are your views in going up to now ANC elections at the end of the year? What effect is that going to have going forward on whether it's whoever gets in, on the economy and so on going forward? Have you got a view on that, or you've got some insight?
I do have a view on it. I do, and I think that unfortunately, I mean, if you go back to 2009, we were sitting in a situation where Jacob Zuma was running for president, and you speak to people in the know, and everyone said it wouldn't happen. It did happen, and I think we're living with the consequences at this stage. But it goes down to more than Jacob Zuma as a person. I think what you've got to do is you've got to understand that the endemic problems that are in our government at all levels, national, provincial, and more concerningly at local level, is this corruption has become so endemic, and the capabilities of your civil service are so compromised at the moment that I don't know whether there's going to be any real impact on who becomes leader. I think whoever becomes a leader won't be Jacob Zuma. So I think the markets will look on that favorably. So I would imagine that sort of going into the end of the year and very early next year, we might see a sort of an uptick in sentiment, because there's going to be a lot of positive rhetoric and whatever. So it doesn't matter who gets in, it's not going to be Jacob Zuma. But I think what will happen shortly after that is that the market's going to realize that fundamentally what has really changed. And the reality of the situation is all the areas of the economy that matter are in the hands of people who compromise. And I think that, right down into the local municipality, probably the person who cleans the dustbins and sweeps the floors is on the take. So, that for me is what's more concerning. I think one of the biggest things that would concern me in South Africa is what is the new leader of the ANC going to set in terms of their policy, in terms of education, in terms of the national health insurance, et cetera, et cetera. So I think it's going to be a little bit early afterwards just to tell what's going to happen. But I think that the way the ratings agencies are looking at it is that when the budget gets presented next February, I think that's going to be a really telling time for how we get viewed as an investment destination going forward.
Yeah.
So I think that that's really going to be a trigger point that we should be looking out for. And what we're hoping is that whatever happens at the elective conference in December and the sort of following 8 weeks before the budget is that they are going to give the ratings agency some degree of comfort that we don't need to get further downgraded. So that's what we've got to hope for.
Yeah. Yeah, my own concern, Andrew, is to be open, is that, Jacob Zuma only came into power because he had support by the SSCP. They effectively dumped Mbeki and put Zuma in power, but it seems like he hasn't been doing what they've been wanting. Because that the SSCP is effectively driving ANC policy, or have been over the years, and you're starting to get these things coming in with radical economic transformation and that sort of thing. And where is that going to take us?
Yeah, I think that what we've got to do is we've got to look at the rhetoric versus the practicalities. And I think that in this radical economic transformation sort of discourse that's become quite popular in the media recently, yes, is obviously designed to make sure that they try and retain some support going forward. It is dangerous because, again, it's all about managing expectations. It's creating a deflection, and people are looking in the wrong places of where things have gone wrong. But the reality of the situation is that, in order to go forward in any system or any kind of belief, whether you're communist or whether you trade unionized or whatever, if you look at the tripartite lines, they really all it's a mass support base of people with very different wants and needs. And I think now that things are becoming difficult, those splits are becoming very apparent. And I think that what the ruling party are going to do is they're going to do whatever they can to try and hold that together. I don't think that's an easy job, and I think it's a very, very difficult position for any leader to be in, to try and keep Labour happy, to try and keep the Communist Party happy, to keep the old military veterans happy, to keep the ANC Youth League happy, and to keep business happy. Because at the end of the day, whatever the agenda is going forward, the finance is going to come from two sources, and that's going to be from the fiscus, and that's from taxpayers. And if you destroy or slow your economy down, your tax revenue comes under pressure. And then the other area where the government gets funding is through the international bond index, where they're borrowing money on the bond markets. And whilst we're heading for further downgrades, again, that's a revenue source that becomes very threatened. Yes. So behind the scenes, one has to hope that there's some advising going on where they're saying, guys, you have to look after those revenue sources, because to be able to deal with the social agenda and deliver on all the promises, you need taxpayers, and you need the bond market and the capital markets to remain intact. So I think it's getting uncomfortable because we're 21, 22, 23 years down the line from the dawn of democracy, and the average man in the street is not feeling very happy about his life. So I think that's going to be the challenge for anybody going forward, is how do you balance the interests of all the different role players in our economy sustainably.
Because the thing is, you got a lot of social unrest, which is feeding into what some of these more radical views are they're promoting, which is very concerning to me.
It's an uncomfortable place we are at the moment, but I think to an extent we've been in these kind of positions before. The one thing that is concerning is we've never been in this position before with the economic trajectory that we're seeing currently, and at a time when the rest of the world is actually kind of turning the corner. You know, the EU's in a fairly good growth position at the moment with economic recovery. The UK is under a bit of pressure at the moment, but coming off a good few years. And the US, things are actually starting to look positive again. So, you know, we would like to be in a position to take advantage of that. And I think that there's a lot of sort of infighting going on at the moment. And we don't have anybody running the economy who's focusing on the economy. There's a lot of political jostling going on at the moment because people are trying to protect themselves for the future. I'm cautiously optimistic. I think that we'll find a way forward. But I do think that there's going to have to be a little bit more pain and stress before the behavior gets forced into a position where we have to face these realities and find a common, solution with common ground.
Yeah, I'm very concerned that you look all the elements together as to where things are heading. But next few months will certainly be an interesting ride.
For sure.
Yeah, Andrew, I don't know whether when you were speaking a bit about, what I think you had some slides there, but are you wanting to actually talk through some of those in terms of what
it might be,
on the Rand side of things?
It might be a good idea if I can run through some of the slides, because I think it sort of gives a picture, a little bit around what we've been talking about. I don't need to dwell on it for too long. And then, James, maybe, from that, you can talk a little bit more about the sort of the technical side of the market.
Yes.
Probably tie in quite nicely, after I've said.
Okay.
And then I think maybe towards the end, I can then just have a chat about, what are the practical steps that one needs to take in order to start moving money offshore, and also in terms of timing with annual allowances and tax clearances, etc.
Do you want me to just put the slides up for you, or do you want to?
Yes, if you could.
Okay. So can you see that?
So yeah. So that was my slide.
That was your intro.
Just speaking a little bit about who we are. So this slide here, I think, is, if you have a look at that slide, that's particularly Rand against the British pound. But over the period of the last sort of 20 odd years, 19, 20 years, I mean, if you have a look at that as what essentially drives your income and costs into a business that you may be running, or that sort of fluctuation is going to have goods that you're consuming. I mean, every one of us is wearing imported product, clothing. We're driving motor cars that many of them are imported. So what happens when you look at that graph there, and you see these incredibly wild swings of the valuation of the Rand against foreign currencies, it makes life very difficult for people to plan, particularly for businessmen who are either in importing or exporting. With a fluctuation in either your income or your cost base based on that kind of swing, there's a lot of risk that gets introduced into cross-border business dealings. But equally, what happens is it makes it really difficult for consumers in South Africa, where we are a net importer, with a Rand that's trending on a downward devaluation, is that over time, everything that we're consuming is just getting more and more expensive. So, as a country, we import more than we export. In other words, our outflows are bigger than our inflows. And that's something that one has to factor in. But this graph just shows you what the swings can do. So if you can move on to the next one. So I mean, we've spoken a little bit about the bleak outlook. I mean, this we don't want it to be a doomy and gloomy thing, but I think a couple of the points that we'll touch on is up in the right-hand corner of that slide. I'd like to chat about some of those things. I've spoken about the emerging market and the commodity recovery. So if you want to move through to the next slide, a little bit more detail. how did we get here? I think essentially one of the things that I think is something we've all got to be aware of is that we're living in an ecosystem economically in South Africa where there's serious mistrust between government and business. You've got South African investors from all walks of life who at the moment are actually not really investing in their own economy because of the mistrust of government. Businesses sitting on a lot of cash. A lot of businesses, we see it, a lot of companies looking at offshore investing to try and diversify themselves. That's not a good position to be in. We should be seeing companies that are established in South Africa wanting to invest in their own environment. So that's something that we need to be very aware of. I think when Pravin Gordhan got rolled in after the firing of Nhlanhla Nene a couple of years ago, there was a big move for business to engage with government and Labour and try and work together. And I think that was actually starting to work quite well until the more recent cabinet reshuffle. And I think we've gone backwards. So I think, at an all-time low of mistrust between government and business. We have a very militant and unproductive labour force in South Africa. We've got increasing unemployment. That, again, is something we need to be really concerned about because people are earning less. There are more and more unemployed people who are going to become a drain on those productive taxpayers. I've spoken a little bit about the ratings threat. Just to put it in context, there are 3 ratings agencies that really matter. And 2 of them have got us on sub-investment grade for our local currency rating. And if the 3rd one pushes us into sub-investment grade, being Moody's, that will mean that around about 150 billion rand will need to leave the South African government bond market. So we're part of the Citibank World Bond Index, and there's a lot of funds sitting invested in South African government bonds where they have rules in their investment funds that they're not allowed to invest in sub-investment grade economies and government bonds. So that is a real threat, and I think that could be possibly the next tipping point unless our finance ministry and treasury can demonstrate that we're listening to the agencies and dealing with some of the concerns that they have around the economy currently. I've spoken about the emerging market growth and industrialization. I think if you look at the basket of emerging market currencies, South Africa's had we're sort of sitting at the bottom of that basket. We have a lot of imported inflation just because of the ongoing decline of the Rand. And that's something that, obviously one can hedge against by investing offshore. And, the confusion recently where everyone thought, well, we had that cabinet reshuffle, we had the consequent downgrades, and yet the Rand actually strengthened. Now, if you look at other countries like Brazil, a very similar thing happened because everybody wakes up the next day and there's not Armageddon when you have a downgrade. It actually takes a bit of time for the real effects to come through. And I think that we're still going to see those effects coming through. And then, of course, I don't really want to talk too much about state capture. I would imagine everybody who's listening to us has seen in the media, what's going on with the so-called Guptas and the Zuptas and Gupta Gate, et cetera, et cetera. I mean, the bottom line is, there's got to be some truth in it. The fact of the matter is our state-owned enterprises are all losing huge amounts of money. South African Airways got a massive bailout 2 weeks ago out of one of our government emergency funds. There's absolutely no will to try and turn these companies around. Of course, there's a lot of talk, but this talk's been going on for years and years and years. And these are things that are putting enormous pressure on the Rand. So that's just to give you a little bit of context as to how we've got to the current position. So if you want to flick onto the next slide, I think what we probably want to be talking about here is where to now.
Yeah, it's
it's come through there. So let's look at the trade balance. And I mentioned earlier that we're a net importer. As a country, we really need to start looking at how we can export more than we import. When somebody sells goods and services offshore and we receive foreign currency in payment, that's technically our country's income. And equally, when we're buying product from outside, that's a cost to our economy. So at the moment, and for a long time, our trade balance has been skewed. And obviously, that means that there are more people needing to sell rands and buy a hard currency than the other way around. And that just puts a downward pressure on the rand, because there's less demand for the rand in terms of our trading than there is for foreign currency. I've spoken about the political instability, the unemployment. Currently has been quite well controlled, but I see that we've just had another big petrol price increase in South Africa, and the rand's again on the back foot. In the last couple of weeks, we've seen quite a big devaluation against all the three major currencies, being the euro, the pound, and the dollar. So I think we're going to see some inflation creeping back in, probably to the higher end of the 6% target that the Reserve Bank tries to keep us in, with that 3 to 6% target. And one of the things that's also keeping the rand strong is that we've got one of the highest money market interest rates in the world at the moment. So, if you invest in the Swiss government bond for 10 years, you will get a guaranteed negative 2% return. Now, that's crazy. I mean, we've been living in a world for the last few years where we've got negative interest rates in some economies. I think, having studied economics, I find it a very difficult concept to get my head around. And the world has been in a mad place recently, where there's been a lot of quantitative easing since the financial crisis. But South Africa still is offering money market investors close to double-digit interest rate returns. So for speculative hot money to come into the South African market makes sense. But equally, the minute the rand starts devaluing in an accelerated way, that money starts to flow out. And that is one of the concepts that one must understand, that when the rand starts to run into a devaluating cycle, this sort of money is very, very liquid and can move out literally within a day or two. And the minute that starts happening, it puts further pressure on the rand devalues even quicker. And so you start getting into that sort of short-term, very volatile panic situation. So I think that puts a bit of context onto that phenomenon. And then, of course, we've really laboured now, I think, on the ANC leadership elections that we know about. The other thing that is quite concerning at the moment is that SARS are looking at an estimated 50 to 60 billion under collection in the current year. So they're going to have to find that money somewhere. And, in the context of what we've been talking about in our post-downgrade world and where we're heading, the last thing that we need is to be looking at taxpayers to try and find that 50 or 60 billion. That's going to be a mix of looking at the taxpayer, who's very under pressure at the moment, and a mix of looking for further investment into our government bonds. We may be forced to look harder at the taxpayer if we are further downgraded. So I think these are the things, James, that we need to be very aware of, and we need to be watching how the government's going to be dealing with those challenges.
Yes. Yeah, it's all pretty negative stuff. Yeah, you got that, Andrew.
Yeah, one must know the position.
Yeah, absolutely. Is this something we want to talk about here now? I'll see your next slide, local versus foreign investors.
I don't think we need to. I don't think we need to spend too much time on this. I think that if the rand weakens, what happens is you'll see if you're sitting in South Africa as a South African, the minute the rand starts weakening, people start panicking, and that's when people start running money out of the country. There's been a fantastic window in the last 6 to 8 months to be moving money offshore. But ironically, a lot of clients have decided to hang on and wait and see. However, 2 years ago, I think you'll remember when Finance Minister Nene was removed, the rand had probably its biggest collapse ever, and it went to 24 to a pound. It was sitting at 18 rand to a dollar, and people were falling over themselves, moving their annual allowances out. And I was saying to them, it's absolutely the worst time to move your money. But the sentiment is so strong, and that is when people feel that this is the end. really bad time. And I think part of what we want to get across as a message in this evening's discussions is when the Rand does that, the last thing to do is panic and run your money out. You have to understand that when that happens, there is going to be a reaction. The Rand will become highly undervalued, and people will start entering in the market and buying the Rand again when it's really cheap, and looking to buy cheap South African assets, which will inevitably strengthen the Rand again. So if you miss one of the up cycles of moving your money out and it goes into a tailspin, probably best not to panic and rather hang on for it to stabilize and regain some of its losses.
Yeah, which we'll cover in more depth just now, Andrew.
So I think, James, from my side, I think I've covered off on most of the stuff that I think is relevant. So I think if you have a chat about your sort of crystal ball for the future, and then maybe then I can sort of bring it into the logistics of actually how to move the money and some of the challenges at the moment with the the logistics around getting tax clearances, etc.
Yeah. So I mean, you were talking about persons panicking and taking money out at the wrong time, and we always ask our clients, do you feel that the market is always against you? Because for most persons, they feel it's almost like there's someone looking over your shoulder, waiting for you to exchange at the wrong time, at just that wrong time, so that they can move it the other way and profit. And that's the funny thing is that you're not the only one that feels like that. And if you look at this next slide, this actually shows graphically what you were talking about, Andrew, is that when the Rand is strong, this shows South Africa's net investment position. So it's foreigners investing in.
Hello, James.
Can you hear me?
Yes, James, you back?
Back. Wonder what happened there. Okay. Where did we get to?
About you just started talking on this slide.
Okay. Yeah. So. So it's like investment position. It shows very clearly that when the Rand is strong, like in 2011, 2007, that's when persons brought the most funds into the country. Whereas when the Rand weakened, like we saw in 2008 and in 2016 on Nenegate, everyone was rushing for the door, which was at exactly the wrong time. They should be doing so. So I mean, the prudent thing would have been to do exactly the opposite of that shaded But that's not how the market works. As you say, we tend to panic when the rand runs. So they're saying you're not the only one that feels like this, and there is a reason why you feel like there's the enemy, because there is one, and it's not the one that you think it is. So just so that you know, I think I've shared this with you before, Andrew, but I know from personal experience, when the rand in 2001 hit 1385, that instead of taking forward cover on our exports, we actually took forward cover on our imports because we expected the rand to go to 20. And yeah, not big loss as a result, but it led me to this journey of discovery, to find out really three questions, and that's what actually drives the rand. Why do we tend to do this? We buy when we should be selling, and vice versa, and then how can we prevent this from happening? And then of course, where to from here. So what I'd like to do is just put up a poll for what on that first question. What drives the rand? What do you think actually drives the rand? If keep all your attention there. You tell us, if you can put in the chat box, what actually drives the rand. If it's not, I think we might have a poll there, but if it's not, they put in the chat box. What are your thoughts as to what actually drives the rand? Alex, have you put up the poll for us? I just wanted to be sure we've got it. Rena saying insecurity. Marco, sentiment, politics, speculation.
Speculation's a big one.
Yeah. Emotion, insecurity, and all the factors. Yeah, so if we can, these are some of the factors that get thrown at us as to what actually drives the rand. Ranging from the things we know, inflation, news, economic data, and so on, central banks, hedge funds, dollar and gold prices, oil prices, down to Zuma and Trump's mouth. And the fact of the matter, that's all part of the puzzle. But how do we put this whole puzzle together? So to show you what we've found out is, if we look at the rand, this is a rand dollar rand over since 1990 or so, we've got this long-term trend line here, but then we've got all these moves around the long-term trend line. And what drives that long-term trend line is fundamentals, which I'll show to you just now. But that is the adjustment, in essence, for inflation in price of goods and services. But that doesn't explain this medium-term driver, these huge swings either side of that long-term trend. So if you look at the fundamentals, and I think you showed it there, inflation rate, this is the producer price inflation adjusted rand from 1957 and 1970, and then giving us an average here. And as you can see, the rand is needed to appreciate on a fundamental level just for us to maintain our competitiveness with the rest of the world. Again, this doesn't explain any of these major swings here. In 2001, 2008, and 2016, and then back down to those those very strong levels again. And so the question is, what causes those huge swings? And if we look at the actual fundamentals themselves, this shows you the actual turnover in the Forex market against the Rand globally. And as you can see, that's sitting at about $17.2 billion per day. Now, of that, we're talking about our trade accounts, our trade and our services. So selling of goods and services only accounts for 4.6%. So that's absolutely minuscule, Andrew, that that the exchange rate is there for that purpose, for the exporters and importers of goods and services, but it only contributes 4.6% to actual Forex. Now, all the rest of it is speculative. So we've got 95.4% is speculative or investment based. So, you're talking about persons coming into our money markets, maybe coming into property markets, to the bond market, stock markets, and so on. All that is speculative and investment based. And in terms of the South African economy, almost 58% of that is non-resident. So a lot of it is foreign investment driven. But I think it's that doesn't explain why the Rand has moved as it has. And I'd like to just just use a few minutes just to explain how we see the market. It's helped a lot of others see it as well. Is that if we look at the market, what drives the Rand? There are positive and negative factors. This is how most persons look at how the market moves. That you've got these positive factors on the one side and negative factors on the other side. And some are more positive, some are bigger factors, some are more negative, some are bigger negative factors. And the general fundamental way of looking at that, whether it's economic, financial, political, or social, is, they'll say, well, there's this information is coming out, or this has happened, and what if it's a positive impact, then we can expect the Rand to strengthen. Or if it's negative, we can expect the Rand to weaken. And that's generally how persons view the market, that it's driven by all these events. But it's impossible to know what all those events are. And worse still, what impact they're going to have, whether they're going to be positive, how they're going to be viewed. So this isn't actually what moves the markets. What does move the markets is a seesaw like this of positive and negatives, but it's persons. So, Andrew, you might be more positive than I am today about the Rand, and a lot of you listeners might be somewhere along that spectrum of positive and negatives. And generally, what you will be doing is, you'll be looking at factors that will influence the Rand, and then making a call as to whether you should be buying or selling or doing nothing. And that is actually what moves the market, because as more persons turn positive, then the Rand strengthens. And if more persons turn negative, then the Rand weakens. So that is actually what is moving the market at any point in time. It's not these factors below, but the persons looking at it and involved in the market that are driving the market by their actions and react to these events. So that brings us to the question, well, how then can we know where the market is moving if we can't be looking at the actual? And that's very interesting, because if you take all these factors at any one point in time today, and filter them through all these persons, millions of persons, we get to an exact price. We're somewhere where we were today, 80. And that's an exact price based on all these unknowns, filtered through millions of more unknowns, unknown actions, unknown sentiment, whatever it comes to this point. So that is the combination. This price is the combination of all these factors filtered through all these millions of persons. And that's actually where we need to start. And then, of course, that doesn't change, because we have more factors coming into the market, changes in all sorts of news and data, and the result is we get these market movements as we know them. But the next thing to understand is that for most persons, when they look at this, they think it's a reflection of the data. It's a mirror of financial data or fundamental drivers, that sort of thing, but it's not. These movements are not the result of Zoom in his mouth or a ratings agency or something. It's the result of these persons taking actions. And what studies have found is that 90% of our decisions are emotional. And then we rationalize them with logic after. So these patterns here are actually emotional patterns. We take action based on our emotions, and those recur. So in times, as we looked at that previous, when the rand was weak, persons took money out. When the rand was weak again, they took money out again. So we tend to do that same thing in the same circumstances. And what we like to say is, that because of that, there is some predictability in the market, but it's similar to weather patterns. So weather patterns, there's patterns of weather repeat themselves, and that because of that, it makes future weather predictable. So what we've had in the US the past few weeks is several hurricanes coming through, devastating hurricanes, and a lot of persons were able to take action and of those warnings. But how was that possible? It's because weather patterns are governed by the laws of nature, and those patterns recur repeatedly in smaller and larger degrees over time. So we can see here on the left, we can see these cyclones repeating themselves. And the more analysis that's been done in understanding those patterns and the laws governing, the better experts can actually forecast those future patterns. But then these human emotions in markets also repeat themselves, which makes future patterns predictable. So, why is that? Well, we also governed by laws of nature. We're governed by the laws of human nature. And those patterns of human nature tend to repeat themselves, repeat themselves in smaller and larger degrees over time. And the more analysis that's done and understanding those previous patterns of sentiment, the laws that govern them, the better we can forecast future patterns. So that is the essence of what we do. Is we analyze patterns of sentiment and then provide clients with a forecast as to where the market is expected to go, based on where past patterns of sentiment have taken the market. So is a recurring pattern of sentiment which just plays over and over and over again in smaller and larger degrees. And we can just show you what the sentiments are at those various points in the cycle. it'll help you understand your own emotions at those points. So if we look at where the Rand was strong, what happens there is a, 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 what's a greed and fear mean that persons are highly complacent here. You tend to be highly complacent and greedy when the Rand is strong. But as soon as the Rand moves up, you start getting a bit neutral. And then when the Rand gets to a peak, we panic. We're in extreme panic. And we take actions based on that extreme panic, as opposed to at the bottom here, we're taking action based on extreme greed. Because then the market collapses again, and we start worrying, is this market going high or is it going higher? It's down to the bottom here, and we say, the Rand can only, it's strong now, look how strong it is, I don't need to do anything. And I think that concurs with what you were saying practically, Andrew, is that the last 6 months, persons have decided to hold on to their funds because the Rand is strong. Not because the Rand is weak. They're holding to the strong, but they should be looking at doing something when the Rand is strong, not when it's weak. But you can see why that is happening, because our emotions are involved in the decision making. And what happens here is then when the market moves up again, the extreme panic situation again. So that's how the cycle works. But to come back to our enemy is, the enemy is our emotions, because it'll make us do exactly the wrong thing at every point in time. So when the Rand was weak here, you had everyone was negative. There was no one left to turn negative. And exporters that were greedy or complacent, and importers and investors that were fearful and panicking at these points. But there was no one left on the seesaw to actually push the Rand any weaker. And so the Rand started strengthening. And it's the clever investors like Warren Buffett here. He says, be fearful when others are greedy, and greedy when others are fearful. That is seeing that market sentiment, your own emotions are the enemy, because you need to know when your own emotions are telling you to do something, very likely you should be doing exactly the opposite. So, how do you actually prevent that from happening? Making those bad decisions. The fact of the matter is, you need to control yourself. We need to control ourselves and eliminate our emotions in that decision-making process through having an objective view of where the market's expected to go, and an objective system, as to when the exchanges. And with that, you're then able to make, an objective, informed, and educated decision instead of an emotional, irrational decision. And then take action at the right time, just like, persons were able to take action in time to avoid, Hurricane Irma coming through. So what we always say is that, what questions must an objective system answer? And really what you need to be told is, in which direction is the current trend? Is the Rand weakening at the moment over the long term? And if you zoom into that, is it weakening or strengthening in the shorter term? You need to know those current trends in several time frames. And then, how far is that trend likely to extend in time and price? How long can I ride this market until it is primed for reversal? When is it primed for reversal? When the Rand was sitting at 1781, we were saying it was primed for reversal. A lot of persons were saying we can expect 50 to the Rand, to the dollar. But it wasn't. It was primed for reversal. And then also we need to know at what price is this outlook invalidated. So at what point is my view wrong? So that's what we try and give persons, is to be able to answer those 4 questions. And just to give you an example of how what we provide, here is our view of the long-term next few years chart, February 2014, where we are saying here a direction that it was topping. We had entered this target area, and we're expecting to head down from there with a possible move, short move up first before collapsing. Now, at this point, everyone was saying the rand should be going a lot further. That is what happened here. That's exactly what the market did. It topped out and came down. But I think I'm missing the next chart, where we actually forecast the market to actually go up 15. Now long-term chart, which again eventuated. I don't know why I'm missing that. But just to show you a more recent one, once the market had topped out in February last year. So I'll just have a bit of water here. The market had hit 1781 in early 2016. We forecast the market to head all the way down, bounce, and then head down, close to the 13 sort of level. And this is in there. That's exactly what happened. And so how did we do this? Well, just by looking at the sentiment patterns over the long term and using that to forecast what the market was going to be doing. And so where to now for the rand? It's the long-term picture. We've had this big move up here from 2011 to 2016, and since then we've been coming down to this area here. Over the medium term, there's a chance we could strengthen a bit more. But overall, we're looking long term. As you can see, the market is moving up long term, but we can expect these aberrations and pullbacks all along the way. So what you need is to be able to time, within your window when you can actually you can best optimize timing. So what perhaps is best to show, Andrew, is what we, and if this is going to work here, just showing clients what we can provide and giving that picture. Are we still looking where to now for the rand? I think we are.
Yeah.
Just wanted to change what I'm sharing here. And share again. Yeah. So in essence, what we get for the market, 4 time frames: short term, the next few days; near term, the next few weeks; medium term, the next few months; and long term, the next few years. That's actually the chart that I was missing back there. This is just a sample, historical sample of what we provide. What we'd like to offer clients that are online at the moment is, to try this out for free, no applications, no credit card or anything, for 14 days. And, instead of me where I see the rand going over the next days, weeks, months, and years, actually have a look at this and experience what it's like to get that sort of roadmap over the next 14 days. So what I'll get Alex to where you can actually do that. But in the meantime, you know, I think, Andrew, that kind of wraps up my side of things. But I think for clients that are wanting to do something, wanting to move funds offshore, and you know, if they feel that this is the time to actually protect their assets, and to move some of their funds offshore, you're the guy that's on the ground that's able to do that sort of thing. You perhaps just run through some of your slides. I know you've put something together as to what is the best way for clients to do that, and how can you assist them?
Yeah, that's fine, James. Thanks for that. If you could you bring my slideshow up again and go to that slide where I was talking about the exchange control environment?
Yes,
it
I'll
was
just
probably about my fourth or fifth slide, I think.
Yeah, let's just.
Yeah, so you know, ladies and gentlemen, for those of you in the room, I think there are a couple of questions one has to ask when making a decision to exchange your rands for any hard currency is what are you looking to achieve? Where do you want to send it? When is one of the most important questions, and that's really a question that James and Dynamic Outcomes can answer for you. That's not something that I take positions on. We do get asked regularly by our clients. I've got 15 brokers sitting in our trading room in Cape Town, and people ask us for advice. We don't really advise people on when they should exchange, because it also depends on the window in which they can exchange. But what we can do is we can tell you how to do it, and we can tell you the best way to do it and how to set up those structures to receive your offshore currency as well. James, if you can go further up, I think it's about the fourth or fifth slide in my presentation.
Exchange control?
Yeah, that one. At the moment, we've just got the how does it impact the offshore investment.
Okay, that should be up now.
No, I'm still seeing that. I think you're on about slide 12 at the moment.
What are you seeing?
How does the rand impact your offshore investment? I'm looking for the slide that says investment secrets, how to move your money out of South Africa. Look, it's fine. I can chat around it without a slide being up.
I'm just.
I think no, that's fine. Alex says the slide's up. I think my presentation here is just showing something different. So let's just chat about exchange control and the current capital allowances. So at the moment in South Africa, we differentiate between private individuals and between what we would call a resident and a non-resident. So for all intents and purposes, if you a South African taxpayer with a green bar-coded ID book, you are regarded as a resident, and you have various allowances that the Reserve Bank have made available to you. So we have the 1 million rand discretionary allowance and the 10 million rand capital investment allowance. So that equates to 11 million rand per year, which I would say in inverted commas is a pre-approved allowance that South Africans can move offshore in a calendar year. So that's between the 1st of January and the 31st of December in any particular year. So we're sitting sort of heading into the last quarter of 2017. So you've got a few months to utilize those two allowances. The important thing to differentiate the two, the 1 million rand discretionary allowance is the money that one can move. You need to be a registered taxpayer with a tax number, but you don't need any clearance from SARS. So if you want to pay for your daughter's wedding, or you want to go on holiday and you're spending that kind of money, then you can take up to 1 million rand per person per year. That money we can move out very easily because there's no engagement that we need to do with SARS to get clearance. So all we need to do is to register you. We need to know where you want to send the money and when you're ready to pull the trigger. And then when you make the decision that you want to do the exchange, we then quote you the rate, and we buy the currency for you, and we'll deliver it to the recipient bank account within 2 working days. On a 10 million rand capital investment allowance, this is again an annual allowance. There's something that one needs to consider here. You need a thing that's known as a foreign tax clearance certificate, and that's issued by SARS. And what SARS are doing is they're saying that you as an individual can move 10 million rand a year outside of South Africa for investment purposes. But what they want to do is to just make sure that before you move that kind of money out the country, that your tax affairs are in order. So provided your tax affairs are up to date, it probably takes 2 to 3 weeks at this stage to arrange a tax clearance certificate. So one must bear that in mind when you're making an offshore investment or a decision to move your money offshore, is you're not in a position to move money until you've got your clearance in place. So that's very, very important. We see many of our clients who make a decision to purchase a property offshore. They see what the rate is, and they want to try and buy their currency at whatever the rate of the day is, but their tax clearance isn't in place yet. So they can't actually buy the currency until the clearance is in place. We do have some sort of products where we can help fix a rate at today's rate for delivery in a month or two's time, but that's not really something that individuals use a lot. So my advice is always make sure that before you make a decision to move money offshore, that your tax clearance is in place. It's something that we can do for a client, free of charge for anybody moving R1 million or more. And just to manage expectations, it used to take 2 to 3 days. It's now taking 3 to 4 weeks. And I think what we're starting to see is problems within SARS and their capabilities, a lot of frustration getting tax clearance certificates. You can get your own accountant to help you with it, and we're more than happy to work with them, or we can help you with our own tax practitioners. Then we also, I'll just mention it, if somebody wants to move more than their allocated 10 million rand per calendar year, we can also help by way of arranging a special clearance from the Reserve Bank. That's a slightly more complex process. We don't get too many people doing that, but we then have to build a case and justify to the Reserve Bank why an individual would want to be taking more than their annual allowance. Interesting to note, if you're a married couple and you're both taxpayers, you can then take up to 22 million rand per year. So for all intents and purposes, the capital controls of the old era have been abolished for the average South African resident. There are not that many people who every year can just take 11 million rand out on the 1st of January. But if there are people who have that luxury, then we can help them. The other thing that we can also do is that if you decide to register with us and use our services, and you want to park your money with us before you make a decision to move it, we can invest that money into a money market account for you with very attractive interest rates. And then also, if we have non-resident clients who happen to have capital sitting in South Africa, we can also help them move the money. It's under slightly different rules. But more importantly, we can actually open up non-resident accounts as well for people living in South Africa who are actually non-resident from a tax point of view. And then we can also help people who have made a decision to leave the country and maybe want to formally immigrate from a tax and Reserve Bank perspective. We can advise and help them in executing for that. So that's just a little bit about the how. And as I mentioned earlier, we do thousands of these transactions a month. I've got a team of 14 brokers who sit in our back office in Cape Town, and that's all they do all day. So I would be delighted to chat to anybody who has listened to us this evening if they want to explore how to open up a facility with us in preparation for moving funds offshore at any time in future. And I think in closing from my side, James, what I'd also like to say is that a company like Sable International is an alternative to one using your own bank to move your currency. And the reasons that people use companies such as Sable is that we provide very competitive exchange rates. I think our customer service is absolutely key, because that's how we grow our business, through providing great service, good rates, and we grow our business through referrals from happy clients. And, we're always happy to discuss clients' requirements if they're slightly more complex. And we can also help with offshore structuring of entities in which to house your funds when they come offshore. So if you want to set up a trust to buy a property in a place like the UK, for instance, or if you're looking for a particular structure in the US, we have a raft of really good companies that we work with and worked with for many, many years, who we can put you in touch with to help with all those tax implications, etc., etc.
Yeah, in essence, Andrew, I mean, if I can speak from personal experience, there's just no comparison between dealing with a bank, one of these main banks, and dealing with someone like Sable. For getting funds offshore at better service, better speed, better rates, everything. So I can only highly recommend what you guys do. And I think Alex even has a link there that, if guys are interested in signing up, and it's no obligations as well. Isn't that right, Andrew, to get an account open up with yourselves?
Absolutely. I mean, it costs nothing to open up an account, and it doesn't mean that you can't use your bank. But I always say, if you haven't used a brokerage and you've used your bank before, try us out. I can pretty much say, I'll guarantee that you wouldn't go back to using your bank.
Yeah, I can guarantee that too.
The other thing as well that I think is probably worth mentioning is that we don't charge any hidden fees or commissions. How we make our money is that because of the volumes of currency that we buy, we get very, very good rates from the liquidity providers and the banks where we buy our currency. And what we do is we put a markup on that when we quote your price. The price we quote you is the price that you get. And we make our money on the difference between the price we quote you and the price that we bought that currency at. And we can pass that saving on to individuals who wouldn't ordinarily get such a good price from their retail bank just because of the volumes. So it's almost like we buy currency at wholesale prices.
Yeah. Okay, well, no, very good. If Alex can just put that link up, if persons are interested. But we got quite a few questions coming through here. Perhaps the first one here is what is needed to open a Sable account, Andrew?
Well, what we do is we please get in touch with us. One of my brokers or client relations agents in Cape Town will have a chat with you. You can either register via an online link, or we can actually help you manually with it. And what we need to do is get your FICA documentation. So that's a certified copy of an ID with a certified copy of proof of address. We then open the facility up. It is fairly quick. If we get the paperwork early in the morning, your facility will be ready to trade in the afternoon. Just to give you an example, recently we had a client from Durban who had an extremely urgent transfer to do. He got hold of me at 6:30 in the morning. I was very lucky when I made my first call into the office that one of my brokers had gotten early. We got everything teed up, and we actually bought his currency at 10 o'clock that morning for delivery the next day. And I think that just gives you an idea of how simple it is. So it's a case of signing a form, and there's a little bit of paperwork in the beginning, and then going forward from that, once we've got all the FICA and the account details, then every time you want to trade in future, it's just a case of making a call through to one of our brokers, agreeing a rate, and then we do the fund transfer.
Okay. Some other questions we've got here are Gregory said, James, are these persons people or companies? Would it differ? No, it wouldn't, because companies are run by people. So, in terms of sentiment, it doesn't matter whether it's, the individual investors or hedge funds or central bankers, that sort of thing. If you take the net, of all persons involved, whether they in companies or individuals, you get a net sentiment that's driving the market. So Marlon, will there be a recording available? Yes, there will. Ascot, wondering what the Rand's going to do against the pound over the next six months. Well, I'd say is sign up for our trial. It's that'll give you the full picture. We have seen the Rand weaken against the pound, the last few months, but we are heading into an area where we are due for a reversal there. So, to get a better picture, I'd say just go in there and so you can have a look at the actual the charts and the targets. But it looks like we might be in a bit of a downward cycle going in the next couple of months. We could be topping out there. So just look at the charts. I don't know what sort of time frame after that you're looking, but the Rand would be weakening overall in the long term, but medium term we expect some strengthening again. Charles, do you guys have Elliott Wave webinars? The interesting one, Charles, we're thinking of doing that. So if anyone's interested, you can just perhaps put yes or something into or Elliott. Click Elliott. Just put Elliott in the chat, and we can see what take up there is on that. Louis, James, get to the point. Okay, what is expected in the next 3 months to the end of December? Do you have to wait or move money immediately or not? Louis, again, I'd say, just have a look at what the actual charts there. But it's looking like we are close to topping out for the Rand. I was expecting it to go a little bit higher. The last L2's move back from a sort of has possibly changed that. So we should be issuing an update later today, which will be available tomorrow, which would give you an update of that sort of the near to medium term view. Longer term, we have been looking for a strengthening of the Rand again before it weakens. Just the timing of that, it depends on when you want to take your funds out, and that also impacts on, Peter, your question is, given the increased capital flows and decline of the tax base, is there a chance the government will reintroduce strict exchange controls, thus making it impossible to move money out as other repressive governments have?
Yeah, I think Andrew, that's maybe something.
Yeah, Andrew, maybe you can comment on that.
Yeah, I think I would like to. So there have been sort of whisperings amongst my industry colleagues about the possibility of capital controls going forward. It's what you've got to understand is I think that conversation is going to be guided very much by what happens if we get further downgrades and there's a run on the currency. It's not unheard of for a government to put in capital controls to try and slow that run down. I think I'm hoping we wouldn't see that. What we may see though is a tightening of the actual amount that one could take offshore for investment purposes. So it was only in 2015 that they raised the capital investment allowance from 4 million per annum to 10 million. So what you might see is just a reduction in the allowance amount before a total ban on outflows. But I think we're still a long way off from that. Personally, I think that would be a really, really scary statement to to everybody. Is South Africa closed for business again? I'd like to think that's not going to happen, but it's not something that one can guarantee. I'd just say if you've got an allowance and you've got money that you can, and again, I'm not advising people to just take money offshore for the sake of taking money off. You've got to understand what your investment objectives are. How much have you got offshore already? Do you have nothing offshore? Are you fully invested in South Africa? These are questions you should be talking to an advisor about. And if offshore is part of your strategy, then make a decision when to move it. And if you want to use your allowance for this calendar year, you've got 3 months to make that decision. The actual time when you trigger and move the money is probably more a question that James would answer.
Yeah, thanks on that, Andrew. Is a concern of mine is, at what point where, the money, you got this talk of taking over control of banks and mines and everything else, but what about, just general wealth? They see it going more and more out the country. Is there not going to, at some point, them saying, no, this is not yours. It's to be blunt.
Yeah, I think there's a lot of rhetoric at the moment. I don't foresee that happening in the near future. But again, crazy things happen in the world, and we are in difficult and quite uncertain times. Again, that goes down to a personal decision. I think if you've got spare cash and you can afford to hedge, then do it. But I wouldn't advocate selling up your house and running away, because the grass isn't always greener on the other side. So again, it goes down to personal circumstances. I think South Africa is very different to some of our neighboring countries in terms of its economic makeup and political makeup. But people are feeling very uncomfortable at the moment. So it's really a personal decision as to how one views it. But I can't see it going into a full-blown repossession of assets.
Okay.
Personally.
All right. Sean, Danuta, can one open an account and do not transfer money within many weeks?
Yes, you can. You can just, basically what you're doing is you're opening up a facility. We open up an underlying call account, which actually sits with Investec Bank. We're agents for Investec Bank. And there's no cost to holding that account. So you can actually just put cash in it and earn interest whilst it's waiting there. And if you want to tell us to send your cash back to your other account, you don't ever have to physically transact it. So there's no obligation once you've opened a facility with us to even use it. But it's a great place to park money. You'll get a better interest rate than you'll probably be getting in your local retail bank.
Okay, thank you for that. And then Sean said, with Brexit and UK uncertainty, should we be looking at diversifying as euro or pound? Can you assist here? Yeah, Sean, again, I'd say, question. Yeah, what do you say?
Well, I'm sitting in my office in London as we're speaking, and we've sat today in board meetings, and Brexit's always on the agenda. And again, it goes down to sentiment. There's a lot of uncertainty around the UK at the moment, so really it could be a great buying opportunity, because the pound has come off against a lot of hard currencies since Brexit. It's made back some of its losses against the US dollar, but that's probably more due to other uncertainties around the US. But if you look at the pound against the basket of hard currencies, the pound is actually fairly weak at the moment. So also with the uncertainty of Brexit, the property market's cooling down here. So that really hot London property market is starting to stabilize now. So again, one could just turn around and say this could be a great time to be investing and buying pounds and underlying pound assets. So again, it goes down to what sort of risk appetite you have. But by all means, I think diversification into a basket of 2 or 3 different currencies could also be a great strategy, and one that should never be discounted is the Swiss franc.
Yes, yeah, it's always
safe haven.
Very interesting
expensive.
One. That safe haven, yeah.
Yeah.
But expensive.
Yeah.
Just another one for you, Andrew, from Peter. Are you you finding a big increase in the number of people wanting to financially immigrate or physically immigrate?
Yes, we just to give you an indication of sentiment, we have a British nationality business that you know, explores ways that people who have a possible claim to British citizenship, you know, could possibly become British. And we run those roadshows in South Africa towards the end of every year. And this is the first time since 2011 where within one day of advertising, we had more than 16,000 bookings for our seminars, which are happening the last week of November. I think that's an indication of the sort of sentiment at the moment. A lot of people won't necessarily qualify, but I think this is a table conversation in a lot of South African homes at the moment. We are seeing a lot of people looking for opportunities offshore, but one must also always, you know, you have to make sure that you can afford the move and that you know that you can and get yourself employed on the other side. So there's a lot to be considered. But equally, there are South Africans who are moving back to South Africa because we do see that, and that's different drivers. We see a lot of young professionals with young children who may have spent sort of 10 years out of the country wanting to move back because home is home. So I think it really depends, but we are seeing an uptick in inquiries for people moving offshore. And in terms of financial immigration, I think the increase in our financial immigration is more around people wanting to disconnect themselves. They're already out of the country. They've just remained dormant taxpayers in South Africa for a long time. But SARS are looking very hard at South African taxpayers who are working and earning funds abroad. So people are now looking to formally immigrate so that they get out of the South African tax net completely. And we've seen a big increase in that business in the last sort of 6 to 8 months.
Yeah, that's interesting. So that answers Donita's question. Does it make sense to officially immigrate?
Well, look, obviously, if you, yeah, if she's talking about financially immigrating, so basically becoming a South African non-resident taxpayer, so you become a non-res, and you have to obviously be a resident taxpayer somewhere else and a legal resident somewhere else before you can formally immigrate. But again, that's a conversation I'd like to have offline with a person, particularly looking at their circumstances, so that we could answer that question more, you know, more accurately. Because again, it goes down to personal circumstances. But there are a lot of South Africans who are living and working abroad who have got absolutely no intention of going back to South Africa, and they are people who should really consider formalizing their tax affairs with regards to financially immigrating, because it has an impact on future inheritances coming out of South Africa, and there are lots of reasons why one would consider it. So I would urge people who are listening, who are living abroad, who have no intention of going back, to consider it and please speak to us. It's always easy if you want to go back one day to just become a taxpayer again. They'll take you back gladly. And formally immigrating has no impact on citizenship. So a lot of people do have a sort of concern that if they financially immigrate, that it affects their right to being a South African citizen. It has no effect on that at all.
Okay, thanks there. Charles says that tax in SA is a joke. I don't know how much of a joke it is. Pretty highly taxed in South Africa. But I think I understand what you mean, Charles. I don't know if there are any other questions here. Peter, you had asked how long is medium term. We normally look at up to 8 months as medium term in our forecasts. But I think that's basically the questions up there, Andrew. So I want to thank everyone that's attended, and thank you, Andrew, for your time.
It's a pleasure, James, and thank you everyone for coming.
Yeah, I trust we've given you sufficient value for in exchange for your time this evening. And we'd really appreciate your feedback on how we can improve this going forward. Renee, how do we contact Andrew for further engagement? There should be a link that Alex has put up, but we'll be sending out that link anyway. So we'll send that link on email, which will be a thank you for attending that anyway. If you don't, just give us a shout. Yeah, thanks.
Feel free. You can also you
Peter.
can find me on LinkedIn, Andrew Rissik, Sable International, and
Okay.
connect with me and send me a message. Good way to communicate as well.
Thanks for that. I didn't even know that, Andrew. Okay, that's Alex has put the link up in the chat role. So give us a shout if you've got any problem with that. And of course, the link as well to our 14-day free trial. Guys, give it a go. Please test drive it, see what you feedback. So our pleasure at Lambertus. Thank you all for attending, and let us know if you'd like to see this as a regular thing going forward.
Thanks, James.
Yes.